All right, let's get right into it. For years, we've all known crypto as the Wild West of finance, right? Well, 2025 is shaping up to be totally different. This is the year the suits show up, the real rules get written, and the entire game just transforms. We're going to break down exactly what's happening, the laws, the massive flood of money, and the new tech that's making 2025 the year crypto finally grows up.
So that's really the big question we're tackling, isn't it? What actually happens when this niche, kind of rebellious technology graduates and becomes a core piece of the global financial system? Well, the answer involves brand new laws, a tidal wave of institutional cash, and a complete rethink of what digital assets even are. It's a huge shift. So let's start with what lit the fuse.
So, what was the spark that started this fire? For any market to go from the Wild West to Wall Street, you need one thing above all else: a clear rulebook. And in the United States, that rulebook has finally been written. It's the foundation for everything else that follows.
It really came down to three landmark pieces of legislation that completely changed the game. First up, the Genius Act. This basically brought stablecoins, crypto pegged to the dollar, into the fold of the regulated financial system. Huge. Second, the Clarity Act finally answered the million-dollar question: is crypto a stock or is it more like gold? And third, the Anti-CBDC Act made a really crucial call. It favored private innovation over a government-run digital dollar.
But this wasn't just about creating rules for the sake of it. Digging into analysis from the KDI, you see there was a really clear strategic goal here. First, to make sure the US dollar stays on top in this new digital age. And second, and this is super interesting, to help tackle the national debt by driving massive demand for US treasuries, which are used to back this whole new digital dollar ecosystem. Okay, so you have a clear set of rules in place. What's the immediate result? Well, the institutional floodgates didn't just creak open a little bit. They blew right off their hinges. All that big money that was just sitting on the sidelines waiting, they finally got the green light to dive in.
And where did all that money go first? Overwhelmingly, it went straight to Bitcoin. Just look at this. By mid-2025, its market share skyrocketed to a staggering 64%. That's its highest point since 2021. This tells you everything you need to know. For the big institutions, Bitcoin was the front door into the entire digital asset space.
But this is where the sheer scale of the demand becomes truly mind-boggling. The spot ETFs, those are the investment funds that hold actual Bitcoin, they weren't just buying some of the new supply. They were buying up 225% of it. Let that sink in. For every single new Bitcoin that was mined, these funds were buying 2.25 Bitcoins off the market. It created this massive supply shock.
And hey, don't just take my word for it. A joint report from big names like Glassnode and Coinbase Institutional flat out said it. This imbalance is the core driver of the market. The takeaway here is crucial. This isn't about hype anymore. This is just fundamental economics 101 playing out on a massive scale.
And this chart just puts that explosive growth into perspective. Look at the first quarter of 2025. ETF inflows were a very respectable $627 million. Pretty good. But then look at the second quarter. That number shot up to over $14.6 billion. That's more than a 20 times increase in just 3 months. It just shows you how fast that institutional capital was flooding in.
Now, for all this big money to move around efficiently, you need the right plumbing, right? So let's talk about the essential infrastructure of this new economy, the rise of stablecoins. These are, for all intents and purposes, the digital dollars of the internet.
And the scale here is just wow. By the second quarter of 2025, the total supply of stablecoins hit an all-time high of $230 billion. These things became the absolute bedrock of the whole ecosystem. They became the internet's native US dollars, used for everything from trading and payments all the way to powering decentralized finance, or DeFi.
And believe me, this isn't just a US phenomenon. Take a look at South Korea. It's a fascinating case study. On one hand, you've got the government pushing hard for innovation. They want their own won-based stablecoin to stay competitive. But on the other hand, the Central Bank of Korea is hitting the brakes, really worried about financial stability. This tension, it perfectly captures the dilemma that pretty much every major economy is grappling with right now.
So, we've got clear rules, we've got stable infrastructure. What happens next? The ecosystem can finally start to flourish. And we are seeing an absolute explosion of innovation that goes way, way beyond just Bitcoin.
So who are the key players in this new, more serious era? Well, beyond Bitcoin, you've got four major ecosystems really grabbing the spotlight. You have Ethereum, which is like the established financial hub for DeFi. Then there's Solana, which is just dominating mass adoption because it's so incredibly fast. Ripple is evolving from just a payments network into this whole financial ecosystem. And Chainlink is the essential bridge connecting all this on-chain stuff to real-world data.
And the financial tools are getting ridiculously sophisticated. Take something called a perpdex, which is basically a decentralized exchange for derivatives. A platform like Hyperliquid lets people do high-leverage trading, but here's the really brilliant part. It takes the fees it makes and uses them to buy back its own token. This creates this incredible economic engine, a feedback loop that rewards both the traders and the platform itself. It's pretty clever stuff.
Okay, so we've covered the what and the why of this whole shift. But what does this mean for you as an investor trying to navigate this new landscape? Let's break down a simple playbook for this more mature market.
There are really three main approaches these days. First, you've got simple spot buying. This is perfect for the long-term holder, but of course, you're still exposed to that classic market volatility. Then there's staking, which is great for the income seeker, but your main risk there is network security. And for the most active folks, there's DeFi yield. It can offer higher returns, but it comes with a risk of things like smart contract bugs.
And honestly, no matter which strategy you pick, everything should be built on these four key principles for 2025. Number 1, stick with platforms that are actually embracing the new regulations. 2, prioritize security above everything else. 3, diversify your holdings, please. And 4, keep a long-term perspective. It'll help you avoid getting shaken out by all the short-term noise.
So as we start to wrap this up, it feels pretty clear that we are standing at the dawn of a new financial era. All the pieces are falling into place for crypto to become a permanent, totally integrated part of the global economy.
Which leaves us with one last, kind of provocative question to chew on. Is this the year crypto finally sheds that rebellious image, becomes an essential tool for finance, and in doing so, maybe becomes just a little bit less exciting? You know, as the Wild West gets paved over and turned into Wall Street, what's gained in stability might just be lost in that revolutionary spark. And that really is the central question as crypto gets serious in 2025.